it's easy to get 4 to 6 points or even 10 or more, you know, in your favor. But you gotta be also disciplined enough to say, all right, if I see the volume coming against me, I'm out. You know, I don't care. You don't need to wait for longer. And even if this trade would have been profitable, you know, I could have easily seen an increased volume and pump the price back up all the way. And you don't want to see that. You don't want to be in a losing trade. You must say, okay, I get out, I take my few ticks, and that's it. Okay, and find another opportunity. Okay. See some more examples. So like in this example over here, the price either we got some strong long-term liquidity sitting over here at the 50, and the price tries to get up. There's some volume over here, but it doesn't get all the way there. Sellers are taking over. Then again, you'll see volume again on the asks, pushing the price up. And again, we have our levels, and we know that likely NQ tends to react before the 50 when coming from below. And so if it comes from below, I will look for an entry anticipating the 50. I will look for a pattern and lack of activity from the buyers that can give me a chance to short it. And so here I got my chance. I saw less and less volume. You see, you know, that compared to the previous move up, to the previous swing, you see this swing. I mean, it's pretty easy to even spot. You see volume on the ask pushing the price up, and then here on this one, there's not a lot. There's the buyers appear to have been losing steam. Took a short over here, you know, after some you know, lack of buyers, you know, that you see over here, and you know, price comes back down from the 46.50 all the way down to 42, 41, 40. You know, and you've got the 40 level down here, you know, those 20 multiples level that start to build up depth, you know, and orders here on the book. Okay. All right, so let's move on to the next one. And here again, you know, it's again those levels, you know, price, you know, is being on a range, you know, between the 20 and the 40. You know, and price comes all the way down. We got the liquidity here at 27. So we know that between the 25, 26 area, you can find often, you know, those are the levels that you want to find your entries. You know, you don't want to find your entries like at 29, for example, or, you know, or 28 or 20. You want to try to see if you can find those entry around those levels, you know, around the 26, 25, 26, around the 18, you know, around the 05, 06, you know, and so on and on. Those ones that I highlighted before. Price comes down, you know, I take the chance to fade this move on a volume peak over here, anticipating, you know, the anticipating, you know, this move to 25 and take some profits at 4 points higher, okay, with the very minimal risk. Okay, so here here I got a couple of stopped out. We got the move higher, price comes back down over here. I enter around the 20. Actually, this was not a very good entry on my side, but saw some more volume coming in, and there was some exhaustion over here, and but then some more sellers you know, took over and stopped me out on this position over here. But you know, as you notice, look at the levels, you know, I was not at a at a very good levels. I got in around the 22 when this was liquidity, and POC and VWAP were around 18. Okay, so I took another long instead down here, and at 18, price got absorbed over here and took profit one here back at 22, and then back above at 26. And see again the 25, 25, 26 area, how it reacts. One could really easily just even take a short over here and get the price to move back down. But the thing is that the most important is that you can take losses, but you gotta be disciplined also to be like, okay, I was wrong here. There was not a good place to enter, but fine, take a couple ticks. Well, there's not a couple ticks. This is 1.5 points, about 1.5 points here. About 6 ticks, 6 to 7 ticks loss, but this, gave me 4 points here plus another. This was almost. This was like 8 points move from here to over there. So it's okay to take losses as long as you get out immediately when you see the volume coming against you, and look for the next opportunity. Okay, so next part, are gonna look for trend days or range days. Okay, we're gonna get into that and see how to trade those different setups. All right, so here we're gonna add another layer of probability in our favor. So up to now we understand how price moves. We understand what moves the price and the dynamics between the market participants, and we understand in particular how NQ moves around certain levels. We're seeing the primary and secondary levels and the action levels. So is that enough, to be able to have our playbook? It can be already enough, but let's get into some other details. Getting into trades when the price is trending or in a range will add another layer of probability in our favor. So in this case, trend lines will help define high probability and low risk entries during range expansion times, during trend days. And volume profile will also help us finding high probability and low risk entries during range compression times. So let's see here, for example, I see a strong trend day up. I got my trend line that's over here, and we're looking for absorption on exhaustions at the trend lines. You got at the trend lines, and in particular, if we find them, the trends end at those NQ action levels. And one would be like, how do you even draw a trend line? Because it's easy to say, oh well, you got a trend line already designed when you're here, but no, that you want to draw a trend line at the very beginning. Like if you have a downtrend, and you see the price breaking above the previous trend line, then I don't have it on this screenshot in particular, but you're gonna start looking already for the very first higher low. Price comes back down, experience a higher low, bam, go to your trend line and draw it and make it go all the way, because on that very first higher low you might already be able to take a trade if it's one of these NQ levels, or you might look for the next break trend line touch. And you see here a huge difference. You see look how many buyers are here, and there's a boatload of buyers over here, and there's nobody selling. Price stays above the VWAP here in the day, some exhaustion, over here, and price goes up again. Boatload of buyers, not much sellers. Exhaustion. Boatload of buyers, not much sellers. Boatload of buyers. Yes, here's some more selling over here, a little bit more, but look for, you know, entries around that trend line possibly. Okay. Also, because if you see a break of the trend line with volume, you want to see, you know, volume pushing the price down, then you don't want to be long anymore. Okay. So again, this is pretty much what I'm talking about. Look, you know, NQ will do that very much. You know, day in and day out, you'll see, you know, big V reversals where you get a trend down, momentary trend down, you know, and you can look for exhaustion. Here there was an exhaustion entry at the